Uranium prices are climbing, and nuclear energy is back in the global spotlight. With governments racing to secure clean, reliable power, demand for uranium is surging, and investors are scrambling for the next big opportunity. But here's the twist. The best uranium stock for this boom might not be Cameco or Denison. Instead, one under-the-radar U.S. player is positioning itself at the crossroads of multiple clean energy trends. Energy Fuels is far more than a traditional uranium miner. It's quietly building a strategic foothold in uranium, rare earth elements, and vanadium, three materials that sit at the heart of the energy transition. And yet, the market still hasn't fully caught on. Welcome to Stocks Telegraph, where we turn headlines into real investing insight. If you're looking for sharp, data-driven analysis without the hype, hit that like button, subscribe, and let's dive into why Energy Fuels might be your smartest bet in the uranium space. Nuclear energy is undergoing a renaissance. Countries around the world are prioritizing low-carbon baseload power as they race to meet climate targets. In the U.S., the Department of Energy expects nuclear generation to grow 3% annually through 2026, hitting new records by 2025. But it's not just about clean energy goals. Geopolitical tensions are forcing Western countries to rethink their dependence on foreign uranium supply. As of 2023, over 70% of U.S. uranium was imported, much of it from Russia and Kazakhstan. That strategic vulnerability is driving aggressive moves to boost domestic production. At the same time, uranium prices have surged from around $30 per pound in 2020 to over $90 in 2025, as supply struggles to keep pace with rising demand from new and restarted reactors worldwide. Without new investment in mining and processing, analysts warn that a significant supply gap could emerge within a few years. Amid this changing landscape, Energy Fuels is one of the few U.S.-based producers ready to scale, and it's not stopping at uranium. What sets Energy Fuels apart is its multi-material strategy. Most uranium miners are just that, uranium miners. But Energy Fuels is building out a vertically integrated platform that spans three key markets: uranium, rare earth elements, and vanadium. At the core of its operations is the White Mesa Mill in Utah, the only conventional uranium mill currently operating in the U.S. It's licensed to process over 8 million pounds of U3O throughput per year, and it gives the company a major processing edge over competitors. But White Mesa does more than just uranium. It's now producing separated rare earth oxides, including neodymium-praseodymium, which are critical to magnets used in electric vehicles, wind turbines, and defense applications. The mill is also piloting production of heavy REEs like dysprosium and terbium, elements that are almost entirely controlled by China today. And then there's vanadium, used in steel alloys and grid-scale energy storage. Energy Fuels can produce high-purity vanadium from existing stockpiles and co-product material, giving it exposure to yet another clean tech trend. In short, while most miners are betting on one metal, Energy Fuels is building a vault of strategic materials. Energy Fuels has assembled a flexible, US-based production platform built for scale. Its flagship uranium assets include the Nichols Ranch ISR project in Wyoming and the Pinyon Plain Mine in Arizona, both fully permitted and capable of restarting production quickly in response to market conditions. At White Mesa, the company is running commercial-scale RE production, having already completed its first batches of NdPr oxide. Plans are in place to expand RE processing capacity significantly by 2027, including potential partnerships with downstream manufacturers. Meanwhile, the mill also has a separate circuit for vanadium recovery. During past market peaks, Energy Fuels produced over 1.9 million pounds of vanadium from its stockpiles, and it retains the ability to resume production when prices justify it. This operational flexibility, the ability to ramp up uranium, REs, or vanadium depending on demand, is what gives Energy Fuels its unique edge. Energy Fuels has shown impressive financial momentum. In 2024, revenue jumped to $78.1 million, more than doubling from $37.9 million in 2023. Net income also surged, aided by the company's expanding production footprint and rising uranium prices. What makes the story even more compelling is the balance sheet. With just $2.2 million in total debt and healthy cash reserves, Energy Fuels is well positioned to fund growth without excessive dilution or risk. Analyst sentiment reflects this. The average 12-month price target sits at $9.26, with a high estimate of $12.85, suggesting strong upside from current levels around $4.70. Several analysts rate the stock a strong buy, citing its diversified model and alignment with U.S. energy policy. Compared to peers like Cameco or Denison, Energy Fuels trades at a similar PS multiple, but offers exposure to far more than uranium alone. Of course, there are risks. Energy Fuels still depends on uranium pricing to justify large-scale production. If prices dip or remain flat, project timelines could be delayed. Regulatory uncertainty, particularly around RE permits and uranium contracting, also presents a risk. Expanding too aggressively could stretch resources, and execution will be key as the company ramps up RE production. Finally, metals markets from uranium to vanadium are inherently volatile. While Energy Fuels is diversified, it's still exposed to commodity cycles that can swing rapidly. Several near-term catalysts could unlock further upside. First, the U.S. Department of Energy has awarded Energy Fuels an $18.5 million contract for the Strategic Uranium Reserve, a clear signal of government support for domestic producers. Second, White Mesa's RE production ramp is in motion. The company has already shipped its first commercial NdPr product and is preparing for expanded volumes. If successful, it would mark the first U.S. commercial production of separated REs in decades. Third, Energy Fuels has secured long-term contracts with U.S. utilities, giving it revenue stability and credibility with institutional investors. And finally, the global nuclear pipeline is robust. Over 65 reactors are under construction and nearly 90 are in planning. As SMRs gain traction, demand for secure Western uranium supply will only grow, and Energy Fuels is ready to meet it. Energy Fuels isn't just a uranium stock, it's a strategic U.S. energy supplier. Its integrated model spans uranium, REEs, and vanadium, giving it exposure to multiple clean energy trends. It operates the only conventional uranium mill in the U.S., is pioneering domestic RE production, and maintains a strong balance sheet with minimal debt. The risks, price volatility, regulatory hurdles, and execution are real, but so is the upside. With analysts calling for more than 50% upside and a growing number of institutional contracts and government deals, the momentum is building. If you're looking for a pure uranium play, there are simpler options. But if you want leverage to the broader clean energy transition, with exposure to critical materials, policy support, and long-term tailwinds, Energy Fuels could be your best bet. So what's your move? Is Energy Fuels in your portfolio, or are you holding out for another uranium name? Drop your thoughts in the comments. I read every single one. And if this breakdown helped you spot the opportunity, hit like, share it with a fellow investor, and subscribe to Stocks Telegraph for more smart, no-hype stock analysis every week.